It usually starts the same way. You open the mailbox, you see an envelope from the IRS, and before you've even opened it, your body reacts. Your heart rate jumps, your stomach drops, your brain fills in the blanks with worst case scenarios. Audit, penalties, trouble, and most of the time, none of that is actually happening. Here's the truth most people don't hear until it's too late. The vast majority of IRS notices are not audits. They're not accusations, they're not investigations, and they're not a sign that you've done something wrong. They're communication. The IRS sends millions of notices every year because it processes millions of returns and automated systems don't ask questions politely. They ask them on paper. Today's episode is about taking the fear out of that envelope. We're going to talk about the IRS notices you're most likely to see, what letters like CP 2000 actually mean, why balance due and math error notices are far less serious than they sound, and how to tell the difference between something that needs calm attention and something that actually requires concern. This episode isn't about avoiding the IRS. It's not about fighting the system, and it's not about assuming the worst. It's about understanding what these notices are and responding to them without spiraling. Let's start with the most important question of all. Why does the IRS send so many notices in the first place? One of the biggest misconceptions about IRS notices is that they're rare. They're not. Notices are a normal part of tax administration. The IRS processes tens of millions of returns every year, and most of that processing happens through automated systems. When those systems see something that doesn't line up perfectly, the IRS doesn't jump straight to enforcement. It sends a letter. From an operational standpoint, notices exist to resolve issues without escalation. They're used to point out mismatches, request clarification, propose adjustments, collect balances due, or correct simple errors. They are designed to communicate, not accuse. An audit requires time, staff, and resources. A notice does not. That's why notices are used first, most often, and most widely. Here's a grounding statistic that matters. Roughly 80% of IRS notices are not audits. They're correspondence, they're system generated, and they're meant to be resolved through mail or online responses. Most never move beyond that stage. The system is built to resolve as many issues as possible without opening examinations. This distinction is critical. A notice is a communication. An audit or examination is a formal review. Notices are often automated, usually focus on one issue, often resolve with a response or payment, and do not assume wrongdoing. Audits are resource intensive, involve human review, have defined procedures, and are far less common. Conflating the two causes unnecessary panic and bad decisions. Notices feel threatening because the language is formal, the formatting is intimidating, the stakes feel high, and the process is unfamiliar. When people don't understand what they're reading, fear fills the gap. But fear doesn't improve outcomes, understanding does. Here's what I want you to internalize before we go any further. IRS notices are common. Most are not audits. Most are fixable, and most are resolved without escalation. Receiving a notice doesn't mean you're in trouble. It means the system needs communication. In the next section, we're going to talk about the notice that causes the most panic of all, the CP 2000, and why it's often misunderstood. Let's talk about that one next. If you've ever heard someone say, "I got a CP 2000, I'm being audited," this section is for you, because that statement is almost always wrong. A CP 2000 is not an audit notice. It's an automated underreporter notice. In plain English, it means the income on your tax return does not appear to match income reported to us by third parties. That's it. No accusation, no assumption of fraud, no conclusion, just a mismatch that the system wants explained. CP 2000 notices are generated by matching programs, not by agents reading returns line by line. The system compares what you reported on your return and what employers, banks, brokerages, and platforms reported. When those numbers don't align, the system flags it and generates a CP 2000. This is data comparison, not investigation. Most CP 2000s come down to very ordinary situations. A 1099 arrived late and wasn't included, income was reported net instead of gross, a corrected form was issued after filing, investment sales were reported but cost basis wasn't reflected correctly, or platform income was misunderstood. Notice what's missing from that list. Intent, deception, wrongdoing. These are timing and reporting issues, not behavioral ones. This part matters. A CP 2000 is not saying you lied, you cheated, you're being audited, or you owe the amount shown automatically. The CP 2000 is a proposal, not a final determination. It's the IRS saying, here's what our records show. If we're missing something, tell us. You have the right to agree, disagree, provide documentation, and explain discrepancies. Nothing is final at this stage. CP 2000 notices often show additional tax, penalties, and interest. That doesn't mean all of it applies. Those numbers assume the IRS is correct, no additional information exists, and no explanation is provided. Once information is reviewed, those amounts often change, sometimes dramatically. The IRS is not looking for an argument. They're looking for clarity. That means documentation, explanation, and context. The calm, complete response resolves most CP 2000 notices without escalation. Here's what to remember if you ever see one. CP 2000 does not equal audit. It's automated, it's a proposal, you have options, and most are resolved through correspondence. CP 2000 notices feel intimidating because they involve numbers and deadlines, not because they're dangerous. Next, we're going to talk about another letter that causes a lot of stress for different reasons. Balance due notices. What they mean, what they don't, and why owing money is not a moral failure. Let's talk about those next. Balance due notices hit people differently than CP 2000s. They don't usually spark confusion, they spark shame. People see a balance due and immediately think, I messed up, I did something wrong, I'm in trouble. But owing the IRS is not a character flaw. A balance due notice simply means, according to our records, there is unpaid tax associated with this return. That's it. It does not mean you were dishonest, you filed incorrectly, you're under investigation. It means money is owed, often because of timing, withholding, or estimates. Balance due notices are usually caused by very ordinary situations. Withholding didn't match income. Estimated payments were too low. Income increased during the year. Credits were smaller than expected, or adjustments were made after filing. For self-employed taxpayers, owing is especially common because taxes aren't automatically withheld. Owing doesn't mean something went wrong, it means the math landed where it landed. IRS balance due notices often include a due date, interest calculations, and penalty language. That doesn't mean immediate danger. It means the IRS is telling you, this balance exists, here are your options. Those options usually include paying in full, setting up a payment plan, or requesting time to pay. The system is built to collect balances over time, not all at once. The thing that turns a manageable balance into a stressful situation isn't owing, it's ignoring. Interest and penalties accrue when notices go unanswered, deadlines are missed, and communication stops. Most balance due issues escalate because of silence, not because of the original amount. Here's the truth that helps people breathe again. Owing tax is common. Balance due notices are routine. Options exist. Communication matters more than speed. Owing the IRS is a financial issue, not a personal failure. Next, we're going to talk about the least dangerous IRS notice of all, the math error notice, and why it's often the easiest one to deal with. Let's talk about that next. Math error notices sound serious? They're not. In fact, they're usually the simplest notices the IRS sends. A math error notice means we corrected something on your return. That's it. The IRS has the authority to correct mathematical mistakes, transposed numbers, credit calculations, and missing or inconsistent figures. This happens automatically, without assuming intent. These notices are often caused by simple calculation errors, credits applied incorrectly, missing forms that affect totals, and typos. They are not audits, they are not reviews, they are not investigations. They are corrections. Do you have to respond to a math error notice? Often, no, unless you disagree. Math error notices usually explain what was changed, why it was changed, and what to do if you don't agree. If the correction is accurate, no action may be required. If you disagree, you can respond within the stated timeframe. Either way, this is not an escalation. The word error triggers fear, but in IRS language, math error simply means the system corrected a calculation. It's procedural, not personal. Remember this, math error notices are common. They're usually easy to resolve, they don't imply wrongdoing, and they're not audits. Now that we've covered the most common notices individually, let's step back and talk about the big picture. Why most IRS notices are not audits, and why escalation is far rarer than people think. Let's talk about that next. This is the myth that causes the most damage. People receive a notice and immediately assume it's the first step toward an audit. In reality, audits are the last step, not the first. Audits required trained personnel, significant time, multiple layers of review, and ongoing case management. Because of that, the IRS avoids audits unless they are truly necessary. Notices exist specifically to resolve issues without opening examinations. From a system standpoint, notices are the efficient option. The majority of issues the IRS encounters fall into categories like missing forms, mismatched income, calculation errors, and unpaid balances. None of those require an audit to fix. They require communication. That's why correspondence notices exist, to correct, clarify, or collect without escalating. In a normal situation, issues move like this. First, the automated system flags something. Then the notice is issued, the taxpayer responds or resolves, and the case closes. Most issues never move past the third step. An audit only comes into play when issues remain unresolved, documentation is repeatedly not provided, or patterns suggest deeper problems. And even then, audits are selective. Escalation doesn't happen because of one mistake, one misformed, one balance due, or one confusing return. Escalation happens when communication breaks down, issues repeat over multiple years, the system can't resolve discrepancies. The goal is always resolution, not punishment. Here's the sentence I want you to remember. Notices are designed to prevent audits. They are the system's way of saying, let's fix this without making it bigger than it needs to be. When to worry and when not to. Not every notice deserves the same emotional response. Some require attention, others just require reading. Let's separate the two. Pay attention when a response deadline is approaching. You receive repeated notices on the same issue, the notice requests documentation, or the language references an examination or audit explicitly. These aren't emergencies, but they do require timely, thoughtful responses. You generally don't need to panic over first-time notices, math error corrections, balance due notices with options listed, or informational letters. These are routine. They're part of how the system communicates. Urgency in a notice is procedural, not emotional. Ignoring a notice almost always creates more problems than the notice itself. Even if you don't understand it yet, acknowledging the issue and taking steps toward resolution keeps things manageable. Silence is what causes escalation, not mistakes. How to read an IRS notice without spiraling. Before reacting to an IRS notice, slow everything down. Here's a simple framework. Step 1. Identify the notice type, the notice number. CP2000, CP14, CP12 tells you why it was sent. Different notice types mean very different things. Step 2. Read what it's actually asking for. Not every notice requires payment, documentation, or action. Some are informational, some are proposals, some are updates. Read the request, not the tone. Step 3. Find the deadline. Deadlines matter, but most allow reasonable time. You don't need to respond emotionally, just on time. Step 4. Separate facts from fear. What the notice says is often far less dramatic than what your brain fills in. Stick to the facts, ignore the mental noise. So let's bring this all together. IRS notices are common, procedural, usually fixable, and rarely audits. They exist to communicate, not accuse. The difference between a stressful tax situation and a manageable one usually isn't the notice itself. It's how it's interpreted and handled. When you understand what a notice actually means, fear loses its power. If this episode helped you feel calmer about IRS mail, I encourage you to subscribe to the podcast, share this episode with someone who dreads opening IRS letters, and come back for the next episode, where we'll talk about what happens if you ignore a notice and how to get back on track if you already have. Tax season doesn't have to be driven by panic. Clarity changes everything. Thanks for listening, and we'll talk again soon.